All right. Hello, everybody. We are live. We are here. Welcome back to another market open. Let me tweet out that I am live right now. For the market open, hello. Fix your wallpaper, disgrace. Good morning, Richard, Heavy D. Good morning, Bit. How bad of a red day are we thinking? Richard, I'm sick today. Hope you feel better, Richard. How'd you get sick? Do you know, or did it just happen randomly? I don't know how bad of a red day are we thinking. I mean, like yesterday was a rather green day with everything going the way it is. Now in the pre-market, everything seems to be red, so that might end up being the signs that today's a red day. But it might also not be as bad as we think it is. Let me just tweet this out real quick, and then we will get started and we'll head into the market. Good morning, Jason. Good morning, Miyoko, Jason Reynolds, Aaron, Ahad. All right, tweeted that out. Alvarado, Seth Roth, good. Good morning, Vincent. Do you prefer with or without facial hair? I prefer with facial hair, but pretty much everyone I've spoken to says they like it without facial hair. Now, I think in the next week, you're going to see it's going to be at a really reasonable level, the way the hair comes in, which I think a lot of people will like, which is reasonable. But I like the beard. I really do like the beard. The beard is the beard. And some people don't like the beard. That's okay. But I like the beard. Maybe the beard was a little bit too big over the past couple months. I definitely could have brought it down. I'm not gonna I'll admit that. But I like the beard. The beard is cool. Good morning. Did I miss the word of the day? No, you did not miss the word of the day. Let me just pull up the market, the Weeble, and then we'll get into the word of the day. And then we'll get into the markets. Now, there's a lot of news coming out from Facebook, Microsoft, and a couple of other sources. So Facebook apparently is issuing some new shares, doing a little bit of dilution. I think that's why we see them down -1%. We'll get into that in a second. A man without a beard in 2023 is suspect. Morning, team. Morning, Mark. Let me see the hair with this midnight chat. Okay, I'll take my hat off in a little bit. Morning Glitch Life, morning Dex. So Facebook apparently is diluting shareholders. Let me pull up the thing real quick. It's an interesting sort of statement they put out today. So the statement is, if you look at the top screen, or if you look at I'm just going to read it. Notice of action taken by written consent by holders of a majority of the aggregate voting power of all outstanding shares of capital stock. They're saying that they will grant 425 million. I don't think they're putting out 425 million shares, but they're putting out something equivalent to more. It's a very complicated way they've written this letter. But at the end of the day, they are diluting. So let me share the screen actually so you guys can see this. Sanjay, thank you for being here. Amit, how did your parents react to your new look? I actually did a Twitter video about it. If you follow me on Twitter, I literally recorded their live reaction to it. If you go to Twitter at Amit is Investing, you click on media and you just scroll down a little bit, you'll see the video. They liked it a lot. My dad was upset though. He wanted me to keep the mustache, and I was like, bro, if I kept the mustache with no beard, I look like an adult film producer. It didn't vibe. So I just got rid of everything. I think for the mustache to happen, there needs to be beard, at least for my face. So, we will see when that comes back. So this is the letter that Meta put out. They're diluting shareholders. And, people kind of knew this was coming. This was like reported before, but nonetheless, it's still happening. Now, granted, Meta buys back stock, so that helps with some of the dilution, but they are diluting. I don't think it's a major dilution, but it is a little bit of dilution that is happening. Good morning, Fat Gabe. Good morning. You look like Freddie Mercury without the mustache and no beard, almost identical. Okay, thank you. I don't know if that's a compliment, but I appreciate what you're saying. Tesla down to 3% at 110. So it made a little bit of recovery yesterday, up 5% to end out at 113. Obviously, Tesla has been absolutely slaughtered to the start of 2023. Market cap of $358 billion. Either you believe Tesla is undervalued here or you believe Tesla is overvalued. I don't think Tesla is overvalued. I just think that it might have some more room to fall given everything that's going on in the macro. Now, the minutes from the Fed came out yesterday, and the conclusion was that they're not going to be raising rates. I mean, they're not going to be cutting rates. So they're saying in 2023, we just don't expect a cutting of rates, which means if you are, I guess, bearish on the economy, that's a good thing because rates go higher. That means stocks should be falling down. So I guess the question is going to be if that actually happens, if the Fed absolutely does not pivot in 2023. I made 5% on my 2 shares that I bought yesterday. Blake, how many Tesla shares do you have, if you don't mind me asking? I'm just curious. I think 110 is fair value for Tesla. Yeah, I mean, I think 110. I thought 150. I bought the dip at 150. I thought that was fair value. I just, in this macro, it's not about fair value anymore. It's about what does the market allow something to be worth, and that is the overarching problem. Now, again, the way I would conceptualize fair value is what do you see the potential? Again, if we assume a very base case of 10 million cars sold in 2030, $45,000 each, 25% margin, take out CapEx, 20% CapEx divided by 3.4 billion shares, you get a $20 earnings per share times 30 forward multiple. That gives you a $600 share price, 20 times 30, which is a 6x from 111, 150, 170. But you've got to assume that they get to the 10 million cars by 2030. Okay, here we go. January 5th, 2023. I hope everyone's having a good January. I am getting used to everything that's happening in January, getting through it. 9:30 a.m. The stock market is now open. Wake your ass up. The stock market is open. Tesla at 2.6% down. Meta 1.24% down. S&P 0.68% down. Salesforce falling under 140, 1.4% down. Alibaba, this was the big winner of yesterday. Ran up above 100. Look at that. 97 on January 4th, 104 on the end of January 4th from the market close. Market cap of $268 billion. I believe the Ant Financial Group also is getting room to go public again. That's I might be a little bit inaccurate on this, but there is something good going on with Ant Group in China. For those that don't know, this was supposed to be like a $30 billion IPO that got destroyed after China started cracking down on their tech companies back in October 2020. So that is something that caused the decline of a lot of Chinese stocks. If that's coming back to at least some extent, that will probably help Chinese stocks. Palantir down 2.8%. This is why I wasn't buying Palantir at 660 yesterday. I mean, I think we have to give it a little bit of time. I don't think we've seen some of the major collapse of some of these stocks just falling down. Palantir now at 638. I sold one cash secured put on Palantir with a strike price of $5. Might do some more of those for an earlier timeline and collect some premium and just see how it goes. Because I would love to have Palantir at 5, but obviously we'll see if it gets there. Enphase at 248, down 1.4%. Enphase again. We saw Enphase. Let's go to the 3 months. We saw Enphase right here at 339 on December 5th. So since then, you got 339 to 248. We have a pretty dramatic decline, even though most of us knew it was going to happen. Some of us shorted, like Gabe. Some of us did not short. But you could tell that it was not going to stay at 339 forever. Now the question is, how much lower does it get from 247? Nvidia 144, AMD 63, Pepsi 177, SoFi 465, Uber 25. SoFi also announced their earnings date. It will be at January 30th, 2021. I'll probably be live streaming that in the morning. So we'll go through SoFi earnings. Last earnings were phenomenal. So we'll see how SoFi earnings come up today. 110 is awesome for Tesla. Ishan says that. Blake, I'm not selling. CrowdStrike, next support is 60 if this breaks. Let me go to CrowdStrike. I haven't seen CrowdStrike since it collapsed from the earnings. $96 right now. Yeah, I remember it at 205 on August 11th, and then the major collapse was here on 162 all the way down to 118. Then it went up to 140. Then it's just kept. Goodness. See, now it's hard for me to think of buying puts and shorting stock. It's like this was the time at 205 at freaking 170. You're like, okay, I can buy some puts, maybe short. If not short, just buy puts. Now it's a little scary buying puts because at 96, do we really think it's going to go down to 60 and have another 20-30% drop? I don't know. It's hard after it's had a 70% drop since now. Bro, where is Amit and when is he coming back to the channel? Amit is still here. I wonder how you guys will like the beard when it's not like a forest, when it's just like slightly on the face. I think you guys will enjoy that because it's better than clean shaven, but it's probably better than fully bearded as well. Why is crowd tanking? I don't know why crowd. I mean, your bet is as good as mine. There are no major catalysts. I was going through the news this morning. There's nothing crazy that happened in the market that is so substantial to cause some huge decline. I mean, after what the Fed said, it wouldn't happen. Oh, let's go to job report. Hold on, let's look at this. Private payroll growth surged by 235,000. Hold on, let me pull up this article. Oh, analyst downgrade? Okay, so there might be a downgrade on that. I think Palantir got a hold rating as well today from an analyst. Private payroll growth surged by 235,000. Private payrolls in December rose by 235,000, well above the 153,000. Wow. The big data surprise comes despite the Federal Reserve's attempts to slow a sizzling jobs market. Service providers added 213,000. Okay, so this is not good for the Fed, right? Because the Fed doesn't want people to have jobs because that means they have more money. They have more money. They spend more money. They spend more money. That creates inflation. This also creates a lot of wage price potential spiraling when there's massive competition for wages, which leads to higher wages, which leads again to more inflation. So the Fed wants jobs to get cut, not for people to constantly add. This is why this is one of the most unique economic situations, I think, in our lifetimes. Like, the Fed's trying to gut the economy, and the economy's like, no, we're not going to let you. We're going to keep hiring people. We expected 153,000 jobs, and we got 235,000. I mean, I don't think that's what the Fed wants to see. The labor market is strong but fragmented, with hiring varying sharply by industry and establishment size. Business segments that hired aggressively in the first half of 2022 have slowed hiring and in some cases cut jobs. And this is with all the layoffs that have happened from big tech as well. So it's interesting to see how that happens. Trade, transportation, utility saw a job loss of 24,000 on the month. Other notable gainers by sector included professional business services. Job gains were evenly distributed between small and medium-sized businesses, which together added 386,000 workers. Companies with more than 500 employees reported a drop of 151,000. Wow. Okay. Well, that's not good news for the Fed, even though it's good news for regular people that just want jobs. Let's go to CNBC and see what they are talking about as well. Let me check some of the comments real quick. Very ironic, but that back in the day, everyone thought low unemployment would be good. Then we got it and it caused problems. Yeah, I mean, like, this is a really interesting part of the economy. Come on, guys, make clean shaven and short hair fun. Yo, you know what's funny? There were so many comments on my recent videos that like, oh, now you look like an actual tech CEO that you're clean shaven, and I'm just like, wow, you guys are funny. I mean, it's true. Most of the Indian tech CEOs, clean shaven, short hair. They look like, who they look like. I just like the beard a lot. But I think I'll keep it shorter this time. I don't think it'll be that long. I think it'll just be a little bit shorter from what it used to be. Okay, let's look at a little bit of iPhone demand analysis from Wedbush. We talked about Apple a lot yesterday and if they would be able to sustain what's going on in the recession.
Apple rebounding today after hitting fresh 52-week lows a day ago, almost every day for the last week. Our next guest just took down his price target on the stock by $25 to $175. Joining me now, that person, Post 9, Dan Ives. He's the Wedbush analyst, of course. Your favorite stock? You always, you lash out at the haters of this name repeatedly. You just took the price target down by $25, but it's something. Why?
I mean, it's really our Asia checks over the last week are showing some softening on non-iPhones when I look at AirPods, Macs, and some of the other hardware. So it was really to take down for that as well as what I view just a lower multiple in this market. But Scott, the reason it continues to be a top pick, it's just we believe iPhone demand can withstand what we see in the dark macro. And I just think a lot of negativity is in the stock. Right now, in the street's value in the services business is $700 billion for what I view as $100 billion.
If we go into a recession, why would anybody run out and spend $1,000 plus on a new phone if they have a reasonably new enough model they would just wait it out. Doesn't that prolong the upgrade cycle and sort of, put a thorn in your thesis?
Sure, and I think it's a great point. I point out that we estimate about 240 million iPhones have not been upgraded in 4 years. And I think that's what's unique about Apple, and I think the Cupertino ecosystem. They have something others don't, that golden install base, which is why I think here on a sum of the parts and where this name goes, we sit here after we go through earnings and they ultimately cut numbers a bit. This is a stock I believe has started to hit its lows.
Did you consider cutting it by any more than 25? And does 175 assume no recession? Let's just start there.
Yeah. So 175 assumes what I will view as a modest recession in terms of a slowdown that I already believe is factored in here in terms of the demand numbers. But ultimately, the reason we didn't cut by more, when we did our checks in Asia, it's showing not really significant cuts on iPhone 14 Pro, which that's why, me and you have talked about. I think that's a Rock of Gibraltar tech name that right now has a bullseye on its back. And I believe it's oversold. And I think we sit here a year from now, and there's a stock that's much closer to 200 than 100.
Okay, so I wanted to watch this video afterward. Josh Brown is actually someone I do respect. I want to hear his thoughts on what the Fed has said and sort of the new paradigm that he believes investors need to accept. In terms of the Apple stuff, I kind of disagree. I mean, a year from now, I don't think we're closer to 200 than where we are right now. I think the Apple demand issue is a big issue. Granted, he's correct. 240 million people have not upgraded their phone, so that could create that influx of demand. I just think if we get a bad recession, again, contingent on that, there is just zero reason to upgrade, and no one's going to do that. Now you don't bet against Apple. I get it. I just don't really want to be long. And remember, 175 is a $3 trillion company. 100, it's like 2.9. 180 is 3 trillion. So for him to say we're going to get to 175 closer by the end of the year, it's a little hard to imagine that. All right, let's take a look at this video, then we'll get back into the market.
Exact opposite. It seems like they want to do a lot more than some are willing to accept. If you look at the minutes, nobody projects a rate cut for this year. As I mentioned earlier, not in the minutes, but who cares? It's Kashkari, who's a known dove, suggesting that you go 5.4 on the terminal rate and then keep it there for a while. They're unnerved by the strength and the tightness in the labor market. All of that portends to more hikes rather than less or finishing anytime soon, doesn't it?
Yeah, but I don't think that's the thing that's bothering the market. I think it's for how long will conditions remain this tight. And, unfortunately, everybody wants 2019 back. So I will stipulate 2020 was a funhouse mirror. 2021 took it up a notch. And I don't think anyone is looking for a return to that level of accommodation. But everybody wants 2019 back, and they're not going to get it back. And there are structural reasons why. The people that have retired in the last couple of years are not returning to the labor force. That participation rate, it's just not budging. And the bargaining power that labor in the services economy has, it's not changing anytime soon. And so this idea that we're going to go back to business as usual and we're going to have 2% interest rates and inflation at 1% and the Fed struggling to get inflation going, that's a fairy tale land from long ago, and it's far away, and that's not what we're returning to. We're in a new paradigm. Everyone has got to accept it. A lot of people already have, but a lot of people have not. And I think the debate is going to be when we talk about the cumulative effect of rate hikes, the debate is going to be how long will it take for us to have felt the full brunt of all of these hikes? And it's going to be a while. It happens quickly in the mortgage market, but it doesn't happen on the ground.
Right.
And the biggest problem is the trigger. What would be the trigger for the Fed to not only pause, but start talking about the possibility of rate cuts? It's like millions of people losing their job. That's the trigger. 4.5% unemployment, maybe.
Which is exactly where I wanted to go with you next. This idea that the pivot is going to save the day. And I want your opinion. I want you to explain to our viewers, this idea of the pivot is somehow viewed as universally bullish. Well, to your point, The only way that they would pivot is if you have millions of job losses, if the economy goes into the tank, but they're only going to pivot if, in fact, it does that. And how is that automatically bullish for the stock market if the economy's gotten so bad that they have to even think about pivoting in the span of this calendar year?
So this is a good question, because if the economy gets so bad, that means that the Fed needs to pivot. That means we've reached like catastrophic levels in the economy for the Fed to actually pivot. Given yesterday, they said they don't see themselves pivoting. So if they don't pivot, we're getting more closer to the soft landing. If they do pivot, that means that means we got into like deflation or something bad, like we need to do quantitative easing, something like that. And so that would be very interesting to see the Fed have to go to that level if we get to the point where we actually do need to pivot.
So it's be careful what you wish for. Are you sure? Are you sure you're looking for rate cuts? Do you have any idea what those rate cuts would have to be accompanied by? Or do you have any idea what the trigger for those rate cuts might be? And I think that's why you're seeing this market-wide preference for stocks that do not necessarily need a Fed pivot. That's why you're seeing the value versus growth regime stay in force. But, you know, one of the biggest issues for stock bulls this year, and it was a big issue in the second half of last year, is that you have enduring competition for dollars. And that competition is coming from short-term treasuries. And why would that change all of a sudden? It's not even like the 10-year has pulled back. It's at 3.69, and the 2-year is 4.5. And every dollar that an asset allocator like myself is going to put in play, that's a real hurdle, a hurdle the likes of which we haven't seen but for a fleeting moment in 2018 during the last rate hiking cycle. But think about this. Take a look at the percentage of S&P 500 stocks with a trailing dividend yield that's higher than the 10-year, 3.7, let's call it. It's the lowest level in 11 years. Only 15% of S&P 500 stocks have a dividend yield that is competitive with the 10-year. So if you want more than just dividends out of a stock and you want capital gains too, well, look at the economic environment that we're in. We know that we're going to be tight all year. So where is the growth coming from? It's a very difficult thing to do to bring yourself to sell.
All right, Tesla's down. Tesla's down. Tesla's down. Here we go. Let's go into the Weeble. I agree with everything Josh is saying. I mean, if you want rate cuts, you have to imagine what it's accompanied with. Tesla down 5%, 108. What is going on, man? Look at this. 113, right down to 108. 107 now. 107.99. Is the whole market following? Baba's down, CrowdStrike's down, SPY under 380, Meta down a little bit, Palantir down, Roku's at 42. Goodness gracious. Enphase, where's ARK? Is ARK below 30 at this point? Is it stabilized below 30? No, it's at 30.61. Okay, so ARK has been buying a lot of Tesla, by the way. ARK is down on all the Tesla they've been buying over the past couple of weeks. Spotify $79, Uber 25, SoFi 4575, Robinhood 796. Interesting. Okay, so Tesla's at 107.63. 107.63. Wow. And there's no reason for this either. I mean, other than the market just wanting to sell it off. Oh, goodness. There's a 90% probability of how much downside you want to eat and how much of the upside you want to gain. You know, it's interesting with Tesla being down this much because I think a lot of people that are really waiting to buy are waiting to buy under 100 because they see it as it's only $7, right? Like we can crack under 100, and that's when it gets attractive. But if it breaks under 100, I mean, I don't know where the support is for this stock. It's seeming to be about 105 over the past couple of days. 104.64 was their big low. The question is if we break that. Let's take a look at Gary Black talking about Tesla stock. He went on CNBC yesterday and gave some analysis of deliveries. His overall thesis has not changed, but obviously he is not the biggest fan of everything going down. I think Tesla is still in ARK's top three holdings. I think I have to check. I know Zoom, Roku, and Square, I believe, were the top 3. I know Zoom is number 1, so I have to check if that's still there. Crowd down 9%. Goodness. Okay, let's pull this up. This is Gary Black on Tesla shares.
Our next guest still bullish, holding more than $40 million worth of stock in his future fund ETF.
Okay, now I know why he tweets every day. $40 million of Tesla. I didn't know how much he owned. Wow. Okay, so now we know why this guy has been yelling at Elon to get off of Twitter and do a share buyback. $40 million is a lot of money in Tesla. Okay.
ETF and arguing that shares could go as high as 400 over the next 6 to 12 months. Gary Black joins us today, future fund managing partner, to discuss. Gary, great to have you back.
Real quick before we gets into it, I just want to say one thing. A lot of the fund managers that are like buying Tesla and saying it'll go to 400, blah, 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 they are trying to make a career and a personal brand and an identity and a reputation, which is, as a hedge fund manager or ETF manager, your reputation is everything, off of a stock that already did a phenomenal run, right? And so I don't know what his average is. I'm assuming it's in the high 200s at least. Kathy Wood and Ross Gerber are the only ones that I know that can really take credit for buying Tesla on an institutional level when no one believed in it. So you got to give yourselves a grain of salt when you look at people like Gary Black. And I love him. I think his analysis is great. And his numbers, he only goes by the numbers, is great. But he's buying Tesla when Tesla is already Tesla. He's not buying Tesla when it's unproven. And you make your reputation when you buy Palantir at $6 and it gets to $70. Like, that's when your reputation becomes a thing as a stock picker, not when you're complaining that it's down in a macro when you bought it at the top.
I just would love to get your reaction to the delivery data yesterday.
Deliveries weren't great. You can't sugarcoat that. There are some temporary things. Obviously, China COVID was raging, and there was some uncertainty about, what you'd get under the $7,500 EV credit in the U.S. So a lot of people were waiting. But, looking forward, the reason we stay with this stock is we think a lot of the bad news is in it. Stock selling at 21 times consensus, 2023 earnings. It's never sold that low. The lowest before was about 28 times. But even if you use consensus estimates, and our numbers are higher than that, we're looking for about 30 to 35% unit and earnings growth over the next 5 years. I can't find in the mega cap space anything that has 30 to 35% earnings growth for 20.
Which is a good point. There is nothing in the mega cap space giving you 30 to 35% earnings growth, potentially even 40, that's trading 21 times 2023 earnings. So like that is a very good point in terms of just numerical analysis.
21 times. It's an absurd valuation, but it is what's going on, and the sentiment is bad, and the volume numbers on the fourth quarter didn't help.
Yeah. Do you think, how does Tesla reclaim the premium that it's had for so long relative to peers?
See, I think it still has a premium. When I ask around, I look at a lot of marketing research. I don't think all this noise that you're hearing about Tesla is impacting the business. It's obviously impacting the stock. You got a lot of investors saying, well, maybe the brand isn't as strong as it used to be. It doesn't have the glamour. But I don't see people canceling their orders for Tesla now, even though the wait time has dropped. I think, you still have a lot of innovation coming. We haven't talked about Cybertruck. Cybertruck's going to come out in 2023. There will be at some point, let's call it 2024, a $25,000 to $30,000 EV, which dramatically expands TAM for Tesla. So you've got a lot of innovation coming. And look, innovation drives people into the store, drives people to the website. They look at things. And look, Tesla still has, when you look at what people buy in an EV, they buy range, they buy performance, they buy safety, and they buy technology. And they just buy a lot of charging stations. Tesla's number one in all that. So I don't think it really needs to reclaim being the premier EV brand. I think it already is. I think right now the stock is just reacting badly to a lot of the, a lot of near-term type stuff.
All right. I mean, that's Gary Black and what he says about the Fed. Let's go back into the markets, take a little bit of a look at it. Tesla still down 4%. And again, I don't know the reason for all this red other than the market just decided to be red. We have Meet Kevin's ETF down 1.73. He had Enphase and Tesla in there, so those are down pretty bad. He also had Lululemon. Let me go to Lulu. 320. So Lulu not down as much as everybody else. It was at 326. Well, it was down from 326, so that's there. S&P. Now, again, the S&P is still not crashed. S&P still at 379. So until we see the S&P get to 360-ish, 362, 360, 359, like we're not seeing the S&P collapse yet. And I think this is the next thing that needs to happen for us to be in a recession. Granted, it's only been 5 days into January, so we'll see how it happens. But we haven't seen it really pan out yet. Pan W, Palo Alto Networks at $134. This is also a cybersecurity stock as well, I believe. Let me go to their max. They were at like 400 at one point, right? No, 213. Okay, so they were at 213 in their max. This was at the height of 2022, and then they've fallen down 134. And they IPO'd at what, 2012? Oh, not bad, man. 2012, they IPO'd at 15, ran up to 213. That's a pretty nice run up. I mean, if Palantir could even get half of that, that would be amazing. That's not bad at all. That's pretty not bad. I did the video yesterday on the Sky Kit that Palantir put out. Interesting concept. My overall thoughts is that I think they're getting into the hardware business because they have a lot of demand from certain governments for like a unified system that goes with their software, and they realized instead of like outsourcing that, what if we just create it ourselves and see if we can just sell it as a package. So I don't think they're going to have a bunch of these that they can't sell. I think they're selling them only to the way that they can, only to the demand that they actually get for people to sell. Amit, you see this yesterday, Palantir's COVID era UK health contract extended without competition. Yeah, I saw this in like a little bit of a screenshot. I think we were expected to see their contract with the UK health for COVID get extended. It just proves the point that the NHS contract we should get. Like, there's no one on the planet that's qualified to get that NHS contract other than Palantir. No one. And so we'll see what the UK does, but it should be us. It should absolutely be us. It looks like they're using Starlink for the Sky Kit. I don't know. That's what it looks like. It might be, might not be, but it did look like they were using Starlink. You forgot Ron Barron. That is correct. Ron Barron also bet on Tesla as well. Any idea how SoFi is going to integrate so SoFi's already integrated Technesis. The question has just become the digital cyber bank that they've created is like the way they've primarily integrated it for now. Technesis and Galileo are not super big parts of their revenue model. We'll see January 30th in their next earnings how those products have increased. But right now, personal banking and loans and lending is their core business, and we'll see how that continues to go up. Okay, that's it for me, everybody. I am done for today. Thank you so much for joining. I appreciate all 240 of you for being here. Last day to invest in my startup, January 13th. Check out the link in the description. I just put out my investor update. So if you go to that link and you click on updates tab, you'll be able to see a video of me talking about it and all the numbers and updates. We've grown pretty nicely over the past 4 months, and we're planning to keep it going. So if you have any questions, let me know. Email me, amit@audia.io, and we can keep going from there. About those kits, interesting that it's Palantir to make those and not Android. Yeah, that's interesting. I mean, I think if Palantir is selling it, they thought we might as well, selling the software, we might as well sell the hardware as well. All right. Thank you, everybody. Appreciate you all for joining. I will see you tomorrow on the Market Open. Bye-bye.